How would you like a super effective set and forget trading strategy that you can utilize in as little as 30 minutes a day? Well, stay tuned because in this video right here, I'm going to teach you exactly that. So when you first get into trading, I'm sure your dream isn't to swap one job for another. So to literally swap one desk for another where you just need to sit in front of your screen all day long, trying to wait for that one opportunity where as soon as you get up, you're probably going to miss it. You know, the dream is to be able to find a way of trading the markets that allows you to spend as little as time as possible, but make as much profit as possible. And funnily enough, that's actually probably one of the most effective ways to trade, particularly for somebody new to the market, because there are so many obstacles that you're going to face as a new trader that if you try to day trade the markets, you're going to make your life a lot harder. In fact, a little while ago, there was a bit of a study done into a Forex broker's customers to see who were the most sort of like profitable traders. And what they found was that the traders that did best were the ones that were trading longer term positions, as opposed to those that were trying to take many trades in a day. You see, there's this kind of common misconception that in order to be able to make more money, you need to be more active in the markets. And obviously, if you're day trading, you're thinking about trading 1 minute charts, 5 minute charts, and things like that, because you know you have that opportunity to recycle your money. The problem is that unless you're particularly good at that, then you're more prone to making mistakes. Okay, so you're going to take trades that aren't there. You're going to fall victim to some emotional trading and things like that. So actually, what was found is that those traders that were able to take a little bit of a step back from the markets and look at them from an end of day perspective were actually more profitable. And the good news is that the strategy that I want to teach you today is one where even if you were trading short term you were doing it well, you wouldn't necessarily be able to make more profits than this, because this is a strategy that I call sort of like an active trading strategy. Even though it's end of day, so it is passive in the sense that you really only need to spend 30 minutes a day checking your charts. You are maintaining potentially quite a few different currency positions if you want to, which allows you to be able to maximize your profit. So you're taking advantage of the intraday moves when they happen, but you're doing it via orders. So you don't have to be sat in front of your screen in order to be able to trade them. And on top of that, you then don't need to sort of like face the emotional roller coaster that you would get if you were trying to day trade the markets. So without further ado, let's jump over to the charts and let me show you how this strategy works. So we're sat here on a Euro Aussie chart, and I'll show you different examples of different pairs in a minute. I haven't picked this one in particular. In fact, this one is probably one of the more ugly charts that I could have picked, to be honest. So we'll go to a nicer looking one, a more trendy one in a second. But I'll just kind of tell you the strategy to start with. So what we're looking for here is it is a price action strategy. All right, which means that we are going to be taking our trades based on the candlesticks that you can see on your screen here. I do have two moving averages. So my first moving average is the 20 period moving average, which is this white moving average over here. This is the faster moving average that I use to tell me which direction is the momentum going. Because when you're trading the markets, you need to get the right balance. You need to look at the context of the market. You need to know what is the sort of like the longer term direction of the market, the longer term trend. And then you need to understand, well, which direction is momentum going? Because there's no point in trading with the trend if momentum is trading against you, i.e. you're in a bit of a price consolidation phase or a bit of a pullback. You want to trade with the trend when momentum is trading in the direction of the trend. And if you have to pick between the two, then you either want to trade in the direction of momentum or the trend. Well, actually, contrary to popular belief, you probably want to trade in the direction of the shorter term momentum, at least if you're trading an active strategy like the one that I'm about to show you here, okay? But the good news is when you start out, you're going to wait until the market is trading with the trend and the momentum is trading in the direction of the trend. So the 20 moving average is 20 period moving average is an exponential period moving average, and it is going to tell us which direction the momentum's in. Then I have this green, this longer term moving average, a slower moving average up here, which is the 200 exponential moving average. And this one allows me just to kind of contextualize the price and allows me to understand which way is the sort of like the longer term direction of the market. So if the price is below the 200 moving average, then primarily I would be looking for sell trades, unless I was looking for sort of like a tactical trade in the direction of the shorter term momentum. But again, it's more advanced trading. That's something that we can go over in a different video there. All right, if the price is above the 200 period moving average, then primarily we're looking for trades, we're looking for buy trades, we're looking for trades to take us to the long side. So what I'm going to do is I'm going to give you an example of a trade I took earlier on in the week, just so that you can, or last week rather, just so you can kind of get an idea as to how these markets work, what the strategy looks like. And then we'll go over some examples of some other charts, because as I said, this wasn't particularly the easiest trade to take, but then again, by showing you a chart that's not the easiest trade to take, it should show you how effective it is, even when you find, or especially when you find a pair that is really trending, that is moving nicely. So I looked at the Euro Aussie here and I saw that it was trading below the 200 period moving average. Okay, so I'm looking for shorting opportunities. I then noted that the market was trading below the 20 period moving average as well. Okay, so now I'm sitting there thinking, all right, so the market is trading below the 200 period moving average. It's also trading below the 20 period moving average. So what I want to do is I want to wait until we get something called a momentum candle, which essentially is a big bodied candle. All right, so it's something like this candle over here. This is a momentum candle. And the technical term, or the best way that I've been able to define a momentum candle, is one where the body of the candle is at least 50% of the overall range of the candle. So let's say the range of the candle is 0 to 100, so it's 100 pips. Well, you would want the body to be at least 51 pips. All right, so the body of the candle is at least 50% of the overall range of the candle. And the close, if you're looking for a bearish momentum candle, is within 20 to 30% of the lows. And if you're looking at a bullish candle, well, then the close is going to be within 20 to 30% of the highs. And that's sort of like the technical definition. But when you start trading, you get an idea as to how these things work out, and you get to be a little bit more flexible with your definition there. But if you're going to hold me to a definition, that's what I'm going for. So this here is a momentum candle. What I'm waiting for is I'm waiting for the market to trade beneath the 20 period moving average, whilst the price is below the 200 period moving average, i.e. momentum is trading to the downside whilst the trend is a downtrend. And the opportunity I get is this one over here. Okay, so this is the first opportunity here. The market, in fact, actually this was more than last week, it was a couple of weeks ago I took this. But anyway, so the market here, as I said, we've got the momentum candle there, and what we're waiting for is the market to close. Once the market's closed, then we look for the market to break through the low of that candle. So we don't immediately get in just because that candle is printed. We need to wait for confirmation, as in we need to wait for the market to break through the low of the candle to confirm for us that indeed, the momentum is going to continue in that direction. Well, that's what we got here. Now, when you get involved in the trade, I wait for 2 to 3 pips below the low of the candle. You put in your orders there, walk away. Your stop loss is going to be above the 2-bar high in a downtrend. So this is a sell opportunity, and the 2-bar low if it were an uptrend. And I'll show you an example of a buy trade in a minute. But so this is the sell trade. So the 2-bar, so the first bar is the trigger bar. This is the momentum bar, this one here. The second bar is the one behind it. So my stop loss went above here at 1.4776, all right? Now, what I'm looking for is a minimum of 1-to-1 reward to risk. So if you take a look there, above there, that's 200, it's actually a little bit more than 218, 225 pips, just a little bit above this bar over here. 225 pips on the upside, so on the downside, I then had to wait. The market did go with me initially. It came very, very close to my profit target. Then it pulled back a little bit. And then last week, it came down and eventually it hit my profit target over here. So I had to sit in that trade for a little while, but I got a nice 1-to-1 reward to risk ratio. And bear in mind that the win rate on this strategy is upwards of 70%, depending on obviously your ability to read the markets. It makes for a very, very profitable strategy. So your stop loss is the 2-bar high or low, and then your profit target is simply 1-to-1 your reward to risk ratio. We'll take a look at another trade. So at the moment, I'm still in this trade. In fact, this hasn't quite closed. And so I'm still in this trade here with the dollar franc. And what I did is, if you take a look here, if I zoom out a little bit, you can see that the market is above the 200 period moving average. It has been trading back a little bit, but it is sort of forming energy to the upside. And I actually posted this in one of my weekly videos, so you can probably go back and check the last weekly video before this video to see me talk about this particular trade here. Now, what I was looking at is the market being above the 200 period moving average, the market then being above the 20 period moving average, and waiting for that momentum candle. All right. Now that is something that we got over here with this trade over here. Okay. So this was a momentum candle in this case. It's a buy opportunity. Now my stop goes below the 2-bar low. So this is a trigger candle. This is a 2-bar low. And that is roughly where the stop is. Okay. Then you measure that and you say, okay, I want a 1-to-1 reward to risk ratio. So we can see here that the stop loss is 120 pips. The market has gone roughly 95 pips towards my target. Hopefully, it will go up and it will hit my profit target. Maybe not. You don't know what happens with the markets. But the point is that the market is going in my direction and it is an extremely profitable trading strategy. Okay, now one of the things I want you to notice is that actually with both of the trades, they didn't immediately go in my direction. It's nice when that happens, but it doesn't always happen that way. You know, sometimes you're going to be sat in a trade for a few days, maybe even a week, but that's the way that trading goes. A massive mistake that new traders make is that they'll go and they'll look at this strategy, they'll back test it, and they'll see that it makes money. And then when they're in the markets, they get upset when they don't make money, you know, they don't hit their profit target the very next day. And that's just not the reality of trading. All right, trading is we're going to manage a portfolio of different positions. And the idea is that you're opening and closing positions on a daily basis and your equity curve is just moving up. It doesn't matter whether the trade that you're closing today is the one that you opened yesterday. It could have been the one that you opened a few days ago, as long as you're closing your trades for a profit. And trading this strategy that I've given you here, you should be doing that at least 70% of the time with a 1-to-1 reward risk ratio. All right. Now, the other thing that I want to say here is that you can trade this at any time of day, although I find it really quite effective to trade this in the evening time. So once the New York session is closed, between that sort of like, you know, the evening doldrums, so between the close of the New York session and the open of the Asian session, I find that a great time to, which in the UK, you know, just somewhere around 10 o'clock at night, is a good time to sit down, look at your charts, just take, you know, half an hour to scan through the different opportunities, put in your orders, and then walk away and either come back to profit the next day. Sometimes some of them are going to be at a loss. That's trading. I can't give you a strategy that doesn't experience any losses whatsoever, but this one is a pretty darn effective strategy. If you have any questions, in fact, before I close it out, I've just shown you a couple of opportunities here which happened on the turn. I want you to be aware that you can also trade this whilst the trend is in motion. So a lot of strategies, you're just looking for that first opportunity. So for example, this first one here, whilst the market is on the turn, but actually you could get involved, you know, this is a momentum candle. So this is a valid buy there. Okay. This is a momentum candle. That would be a valid buy over there. This is a momentum candle. This is a valid trade. This one closes a little bit off the high, so I wouldn't necessarily look at that one. That is a valid trade over there. So even once the market, whereas with other trading strategies, you can't be that active because you're waiting for the pullback, which when you're trading daily candles is something that can take months. With this strategy here, you could be in and out many, many different times in a month in the same currency pair. And if you monitor The amount of currency pairs which I monitor, which is over 30 different currency pairs, there are always opportunities there, which is why you can be just as active as you would be if you were trading a shorter term strategy, but you have the benefits of trading the longer term charts, which essentially are more reliable and easier to trade, particularly if you're new to trading. Okay, so I hope that made sense for you. I don't want to obviously drag this out or anything like that. If you've got any questions about the strategy or about the execution, please feel free to post a comment beneath the video. If you haven't subscribed already, and many of you watching this probably aren't subscribed, please hit that subscribe button and then hit the bell so that you get a notification as and when I release new videos, okay? Thank you so much for watching. I hope you enjoyed it. I hope this makes you lots of money, and I look forward to speaking to you in the next video. Take care now.